Hello, everyone. It's Brian with TINYCRYPTOBLOG. Welcome. Happy Friday. This week, touching on something for the things that stood out for a summary, which is an ongoing thing. And I've noticed this the last couple of weeks. I put out a video last week, maybe it was the week prior, talking about the dangers. This was after the settlement was announced with Binance, and then Kraken got slapped with another fabricated charge of how we're looking at an instance of institutional capture. And that got my mind thinking, and I got the gears turning. And there was a video by Charles Hoskinson, who was one of the founders of Ethereum and also Cardano. And he had a video where he touched on a lot of points that I think were coalescing in my mind and helped solidify some things. And that's what I'm going to talk of first. And then once I get through these points, I'm going to share portions of the video that bring up very relevant points as far as where is Bitcoin and cryptocurrencies in the space. Where are we going? What are the risks? And what do we want our world to be? What are we doing about our world? So with the first part, I'm going to be reading off my summary notes here. In the US, Bitcoin is at risk of a protocol capture by established interests who can influence a fork war a la 2017. If you weren't around during the fork wars, that's when BCH, Bitcoin Cash, was created, because there was an argument within the Bitcoin community saying, in order, and this was before the days of a prominence of layer 2 applications being built on top of protocols. Everything was done on the layer 1. So all transactions are recorded on the Bitcoin 10-minute blocks. And people were arguing we needed larger blocks to be able to handle the volume of more transactions as adoption grows. And there are people who said you can't do that because the size of the ledger would become too large for everyday people to be able to run on a computer, on a Raspberry Pi. And it'd be larger moneyed interests and larger interests that could afford to run a node that would run a node. Well, as it turns out, Bitcoin Cash made their split. Roger Ver and a lot of the miners went with Bitcoin Cash, but the majority of the node operators stayed with Bitcoin Core as it became solidly known. And so that's where we have more than one type of Bitcoin today. Well, we have a situation where with the introduction of institutional money via Bitcoin ETF and the instance of regulation, where if we were to have another fork war, let's say we got our Bitcoin ETFs, Fidelity, Vanguard, Bitwise, ARK, BlackRock, several other players. They get their ETFs. Well, with the range and influence that, I'm just going to use BlackRock as the best example here, that they have, what if at some point they decided to come up with a fork? Maybe the example of Charles Hoskinson gave was, we have a version of Bitcoin that has stable coins on it, or some other feature. Maybe it's proof of stake. Maybe it has shorter block times. Who knows? They could push for the adoption of that as the Bitcoin. They would have the ability through their investments, companies that own shares of stock of publicly owned companies, of direct ownership of shares of publicly owned companies. There's a lot of Bitcoin miners out there in the US who are publicly owned that I wouldn't be surprised either through digital currency group or directly purchased stock, BlackRock has an interest in. Maybe this has led to a point where there's someone on the board of directors of a company or the board of directors of a company that has influence over these miners or any other companies. Coinbase, let's say they've got investments through investment means with MetaMask, with any other wallet provider that's common out there, with on-ramp companies. I'm not saying like Strike or Rivers Bitcoin or Swan. These are companies that do not, to the best of my knowledge, have any sort of influence. But let's say that we do have an on-ramp platform that becomes popular. Say like a PayPal, say like a Venmo, which is owned by PayPal, say like a Robinhood, where BlackRock has this level of influence on the decision making, or they can just turn things in a certain direction. Or if you want an example of this, of what I'm getting at, they were the drivers of ESG. And look how pervasive that became. So you can't underestimate the influence that can be exerted, where it's for adoption of this alternate Bitcoin. And the exchanges could be maybe influenced or pressured, or, all the players pushing in favor of can play PR campaigns where they'll list the alternative Bitcoin once it goes live and maybe not offer anything of Bitcoin Core, or offer trading, or cease to offer services, or just wind down, or maybe we're going to stop offering these services for US customers, then European customers, then customers everywhere globally. So we have a situation where there is a risk vector of Bitcoin Core and everything that people have put into that being put at risk because of the narrow interests that could push through corporate channels. That is a different risk. Now I'm looking at my notes. Now other angles of influence: stablecoin issuers, Circle, Tether. I know there's others out there. I don't keep up with the stablecoins to remember who does what, but those are open companies. Those are companies with centralized companies, and they can have, either through law, through legislation, through subtle other means of pressure, be influence. They can be influenced. So those are risk vectors as well. So what can be done about that? Well, obviously building protocols and features onto the Bitcoin network, Lightning, Nostr, I know there's other protocols, ordinals, stacks, building things that rely on Bitcoin so that there's an adoption, there's a value proposition where people want to use Bitcoin. They choose to use Bitcoin Core. And if it has more than some alternative chain has, well, Ethereum is, I would say Ethereum as an example would be pretty safe, that no one's going to fork Ethereum and say, use this one instead, because so much is built on top of the original Ethereum, although the risk exists. Because just with other smart contract platforms, they build virtual Ethereum machines so that their protocol can run on Ethereum. What's to say that someone couldn't build an alternative to Ethereum and have the same influence, where all these layer 2 and layer 3 protocols build something to run on the alternative, and for some reason the alternative becomes more attractive than the original? Maybe it's lower fees, maybe it's proof of work, maybe it's a different delegation system and block verification. Who knows? But this is a risk that exists. And for Bitcoin Core to remain relevant, it has to be the choice. And the node operators and the miners need to be incentivized to do so. And then the other part of this, the bigger picture, which I think is extremely worrying, and it's something that it pushed me down to the very level of questioning, do I even want to be involved with Bitcoin, period, is with all these exchanges, all this regulation, all of the regulatory capture with onboarding services, the KYC corral, where every transaction, every move, every time you move a coin from one wallet to another, it can be traced back to you. You did this. And if you didn't do it, it was done on your device, your laptop, your PC, your phone, your cold storage wallet. Every single move you make. And what does this lead to? It leads to risks in, the amount of surveillance. Nothing you do can be done without a threat of taxation, criminal or activity limiting enforcement by a government entity stepping in and taking away your sovereign power, the power that you and the choice that you are still able to exercise today. In the US, I definitely feel that corral closing in, where everything is done under surveillance and you don't have the privacy and the sovereignty to make your decisions. Because how do we know that with all the transactions recorded and tied to users, it'll be easy to enforce or force actions on these service providers and the customers of the service providers? You think if they came down on strikes going to just say no and keep on running? They might be a case of, you know what, US users, we're shutting down operations tomorrow. Good thing we're based outside of the US jurisdiction because we can service the rest of the world. Just like Binance US, just like Huobi US, just like Abra, just like, gosh, I'm forgetting the exchange now, Bittrex, just like Bittrex American users, they're getting shut out of the picture because of the regulatory squeeze, and it's real and it's happening. And Charles mentions that too, and I'm absolutely going to be sharing that part. But there's no end to where, because every transaction, every coin can be tracked and traced and connected to someone through KYC, you have a situation where we could be forced that in order to maintain legality, we have to use single addresses. The utility of sending and receiving using a newly generated Bitcoin address is no longer allowed. You have to use your one address, and every transaction's got to go through that. What if it's a case of, that can be done where then it can be taxed? Then you're forced to use only certain wallets, maybe. You're forced to switch over, and it can be used in any way, including confiscation, should it come to that, because, well, everyone knows what wallet address you have and what you own. There's no privacy in that regards, none. So the degree of KYC that we're willing to accept because of how it invades on personal privacy, that's something where we need to consider that, because otherwise Bitcoin is no different than having a bank account in US dollars. It's the exact same thing. There is absolutely nothing to be had from that. Nothing. In which case it's useless. It's like a share of Tesla stock, a share of General Motors stock, buying a bond, owning a contract on a commodity or real estate or something. It's no different than anything else. And everything that was built into it and why is meaningless. It's meaningless. It's meaningless. So, all right. That'll be something I'll be thinking about. But let's get on to Charles. He's got some good things to say. Let's bring him in.
Let's be very clear. There are companies and members of the Bitcoin space that have actively lobbied Congress and the US federal government to criminalize altcoins. That's a fact. I know that for a fact. I've spoken with staff of lawmakers who that same day spoke to members of the Bitcoin community, prominent influencers, who literally just had a meeting where they were told everything but Bitcoin should be made illegal in the United States. And yet we're told, let's just all get along. There's no way to get along on that facts and circumstances. As with all these projects, they tend to start with a small group of people, all open source projects, almost every single one, whether it be Linux with Linus Torvalds or Rich Hickey with Cloture, any usual open source project, small group of people come together, they think of a few magical things, they build an ecosystem and a community, and over time, the governance of that and the ecosystem changes. It decentralizes. People leave, people die, people retire, new people come, new ideas come, and that's what makes these projects so remarkable and so amazing and so much fun to participate in, because you can go away for 5 years and come back and see a completely different ecosystem. Bitcoin was no different. From day one, it was a sole miner, a sole architect. One person had, or one group had, complete control over the code and protocol. You can't escape that if you live in the Bitcoin space. We don't know, because that person is anonymous, chose to stay anonymous because of the legal ambiguity, what financial arrangements were made. For example, talk about ICOs, talk about private sales. You in the Bitcoin community seem so in love with criticizing Cardano. What if Satoshi Nakamoto wanted to take 2 years off from work and made a side deal with one of his friends and said, I'm going to mine this thing called Bitcoin, and I'll give you 5% of whatever I mine in exchange for giving me 2 years' salary so I can go and work on this? Guess that's kind of a ICO. Guess it's kind of a pre-sale. Product doesn't exist. Do you know it? It's a private deal. So if a group of companies overseas get together and they finance in Japan or somewhere else a completely unrelated thing, somehow, some way, we should apply that there, but not with Bitcoin. We don't know. It's so far gone. And this is by design, because here, let's be adults. Let's really talk about this. The reason this is happening is that the people who run the show, who want CBDCs, the people who run the world, they understand that if the world gets back control of its money, of its voting, of its identity and data, that it's going to be really hard to put a global regime over humanity and have a small group of people run the whole show. So what they do is they try to make sure that there's no projects or programs in the long term that return power to the people, make people their own bank, push power to the edges. They're real comfortable with things like Bitcoin because it's very clear how to control that. At the end of the day, the Bitcoin core protocol does not have smart contracts that are capable of doing the things that Cardano and Ethereum can do. There are no DEXs. There are no oracles. There are no algorithmic stablecoins. There are no on-chain DAOs. There is no on-chain infrastructure. All of the resources of that system are exogenous. And over time, the system will get too cumbersome to run on normal PCs. So the vast majority of users will leave their assets on regulated exchanges. The vast majority of users will use light wallets connected to some third-party source that probably will be regulated at some point. So if all your on and off ramps, all of your everyday use cases and are completely regulated, and you can't do much other than the fact that send tokens around, your miners come from ASICs, which have a limited supply chain, and there's an economy of scale that over time centralizes the mining operations to fewer and fewer actors, and they have a real hard time moving that resource because data centers are big. Doesn't that feel like a fairly easy thing to control? And doesn't that thing not feel like a big threat? It's not value stable. It's like gold. It's volatile. Governments can tolerate gold and still institute tyranny. Gold is traded in China. It's not a problem. But it is a problem having smart contracts. It is a problem having a programmable ledger. It is a problem with the trajectory of evolution of the non-Bitcoin cryptocurrencies. Because those cryptocurrencies have the capability to displace and replace most of the capabilities of sovereign governments. They can be marketplaces. They can be national ID systems. They can be national voting systems. They can be education systems, credential systems. They can be sound money. They can be all the things, supply chain systems, medical record systems. Yet the difference is they also can be decentralized. They play by consistent and fair rules for every single actor and player there. And over time, they become much more efficient. And they learn from each other. That is the threat to the world order that we're marching towards. And that's the opportunity for us as an industry to have humanity take itself back so that.
So in that instance, he talks a lot. He brings up good points, rightfully slamming Bitcoin maxis. I kept out some of the stuff and just cut right down to the bone on that one. And I think there's a bit of blindness from adoption fever by reaching levels of mainstream adoption and penetration. The feeling of validity, verification. See, Bitcoin's legit. It's legit. It's legit. That validation is blinding people, including me. It blinded me to this. I didn't see this at the outset either. It blinded people to what are the risks that come with mainstream adoption. And we're seeing this now. We're seeing this now. I'm going to shoot on to Charles, going a little bit further into risks here.
Against altcoins. You know, another thing is they love this idea of ETFs, BlackRock, others coming involved. Did you ever ask yourself what kind of power these institutions will have once they foment themselves in our industry? So let's say there's a fork. There's chain A and chain B. If all the services that you need to interface with those chains picks chain A, and 90% of the community picks chain B, despite the fact that the overwhelming majority of people want to be on chain B, what happens? Chain A wins. Why? Because chain A is the only one with stablecoins. Chain A is the only one with exchange support. Chain A is the only one with all that consumer infrastructure. And that is the consequence of centralized stablecoins, centralized exchanges, financial infrastructure like ETFs and these types of things. You are handing the democratic control over what's legitimate, what's not, to someone else. And they say, oh, but we solved that in the Bitcoin space. Whichever one has the most hash power wins. Okay, that might be true, but what if they support the minority chain? And the majority chain, they say, well, not going to list it. Well, the value of that chain goes down. What does that mean? It means that the miners switch over because they're mercenary. That's the economic model there. You have to make more than you spend. It's not a charity. You see the problem here? You see, and so it's worthwhile to have a broader conversation about diversifying consensus. One of our protocols we invented was Minotaur, multi-resource consensus, where you can put proof of work and proof of stake and other protocols together in the same network.
And again, touched on what I just said, institutional capture.
Sound money and sound infrastructure. And the very first block of Bitcoin was a reference to the 2008 banking crisis as a symbol of the moral failings of those who came before us. That's not the same Bitcoin as it is today. It's a different ecosystem, it's a different group of people. I'd argue the majority of people that hold it know nothing of the philosophy and don't care about it and view it as just another asset, whether they be a financial institution or a fair weather investor. The libertarian cores have completely dissolved and gone elsewhere in our industry. And there's still a few hardliners here and there. That's fine. All I ask is, why are you so judgmental about the rest of the industry? The existence of Cardano is a net benefit to Bitcoin, whether they want to admit it or not. For years, Bitcoin tried to discuss things like color coins. They tried to discuss things about how to do smart contracts on Bitcoin. Projects like Simplicity, projects like BitML, years and years of thought and effort. Meanwhile, Cardano took UTXO, extended it, and figured out how to put a smart contract language on and preserve and protect the exact same type of model that Bitcoin seeks to preserve and protect. So it is a case study for how one would do smart contracts in a responsible way on Bitcoin. And had that knowledge existed, I would bet every dollar I have that Satoshi would have used it to put smart contracts on Bitcoin when he launched it in January 3rd of 2009. When we look at other pieces of research in the portfolio, for example, Cardano native assets.
So where are we at here? Skip ahead. I've got this one titled as Death by Established Interests. Make sure you listen up.
Treat us, and it's perplexing, but doesn't really bother me as much as it bothers some others. I'm angry over the inconsistency of policy, because at the end of the day, I am an American citizen. I live in America, got a ranch in Wyoming and a farm in Colorado, and I'm going to die in America. It's my country, for better or for worse. And it brings no pleasure to me to watch my nation declare war on an industry that not only would liberate it from many of its biggest problems, but also guarantees that we will miss out on a multi-trillion-dollar revolution that is the future of the global economy. Imagine if in the 1970s, the United States decided that the semiconductor revolution, the computer revolution, is not for it, and to make Silicon Valley illegal, to make Microsoft illegal, to make Apple illegal, and all those companies go somewhere else. 10 years later, say, well, maybe we got it wrong. Come back. Do you think Germany can convince Microsoft, Google, and Apple to leave the United States now, no matter how sweet they make it? No, it's too late. So if you offshore the entire cryptocurrency industry, it won't come back. And what that translates to is a more grim economic reality for the United States as a whole. And this deeply frustrates me. Went to college in a few places, but one of which was Metro State. I remember fondly as a teenager walking down 16th Street Mall, going through Civic Center Park, spending time Capitol Hill. A girlfriend at the time had an apartment right off Capitol Hill. Spent a lot of time there. There were some homeless, but by no means as many as I see today. There weren't encampments in cities. The crime is much worse. You can see the luster of Denver.
All right, I'll pause it right there as he waxes on before and after. And right there, it's by established interests maintaining their hold and trying to bring a new flourishing technology and decentralized blockchain applications, or just blockchain applications, the whole spectrum, they're killing us. The selfishness and greed of people pursuing interests for a world that no longer applies. You're getting the indirect effect of killing an outlet for human innovation to flourish. That's what we're facing. All right, let's get on to the final words. What kind of world do you want? What is your purpose?
Each other. That's it. And that's the decision we have to make. So as you make your YouTube videos, as you tweet, as you make your comments, really take a moment, take a time out, and reflect. Why are you here? What do you want to accomplish? What do you want to do? What's the point of this? What's the point of your own life? What type of world do you want to live in? Where do you want to live? When is it too far? When are you in the pot being boiled? We are so close to CBDCs. We are so close to AI being integrated with CBDCs and social credit becoming a universal concern. We are so close as a society to you going to a gas station and trying to buy some gas and saying, sorry, you've already filled your tank this week. You can't do it again. Sorry, you've already bought this thing. You can't buy any more. Sorry, you belong to the wrong group of people. You're not allowed to buy that. Sorry, you pay a different price than this other group of people because you're in a different part of the grievance hierarchy. It's not a hypothetical thing. They write papers about this. They talk about it. Old Klaus says you'll own nothing and be happy. They say this is the only way to prevent a climate catastrophe. They say this is the only way to run the world moving forward. And we have whole nation states like China pursuing it and giving us paint by numbers reality for that. The very same people doing that are the people writing policy papers about how the United States needs to do it and creating a step-by-step guide to do that. And that is something that's going to happen in the next 10 or 20 years if we're not careful. I'm old enough to remember how 2 weeks to slow the spread became papers, please. And we had to show vaccine cards to go into Starbucks. Remember when people said such a thing would never come to pass in the United States, but it did. It's fragile freedom. And technology's gotten too good. Globalization has gotten too pervasive, and corporations have gotten too big. Governments have become too esoteric and unaccountable, and the bureaucracy of governments is more powerful than any elected official. That's a universal truth for most modern society.
AKA the swamp.
The social contract upon which modern constitutional republics have been founded and democracies have been founded is becoming unraveled, and it needs to be renegotiated and reestablished. The whole point of the blockchain and cryptocurrency industry, every single one of us, is to establish a new social contract where our liberty is preserved and protected, and we do not live under a technocratic tyranny. That is the point. That is the reason the laborers exist. That is who we are. And a lot of good people go to work every single day to try to preserve and protect that. They're not criminals. They're not evil people. They're not shitcoiners. They're not here to steal from you. They're here to try to make the world a better place. That's what I fight for. That's who I am. It's why all our papers are open. It's why we write all this code. It's why we built Cardano. It's why I worked on Ethereum before that. And it's why I'm still here. I don't have to be. I really don't. I can go do anything in life. I'm in that position. I choose to be here because this is the place to be. There's nothing in my life I can do, or frankly, other entrepreneurs in this industry could do that's more consequential and significant than being here right now, because we're on the front lines of a conflict of philosophy. And we have a small window of time to unify and work together to make this world a better place. And if we let that slip because we're divided, by default, we just have to live with the consequences of centuries of darkness. I don't want to live in that world. I don't want to reflect upon the fact that we could have won, but we didn't, and we allowed that to slip through our hands. And I don't think the vast majority of you living, if you really think about this, want that world either. So ultimately, it's your decision. It's your choice. And it starts with you. Take your agency back, your self-integrity. Take a moment. And before you tweet, before you post on Reddit, before you consume something on YouTube, take a real moment and think about it. And ask yourself, is this really the path forward? Or maybe we should choose an alternative one. I'm not advocating this video one cryptocurrency or blockchain technology over another. Just like when I spoke before Congress, I didn't mention the word Cardano once. Why? Because it wasn't about Cardano. I was there to represent the industry as a whole and fight for all of us in the industry. And you have to ask yourself, are you here for that? Or are you here for the gains? Are you here for your particular ecosystem, your particular team? Everyone else is evil. And ask yourself, what are the consequences of that? Where does that lead? We don't get many of these opportunities in life. We really don't. They come up once a century, usually when an empire starts dying or in the back of a big conflict, big war, a revolution. It's a rare window where for the first time in my life and in your lives, we've actually have a real shot to change things for the better for everyone. Why are we going to let that slip through our hands? Why should we? It's been a very long 10 years. Y'all comment about how old I look, and didn't have as much gray in this beard. I had more hair on my head. It's tough. It's pretty demanding, the travel schedule, and it's pretty demanding waking up every day and pushing forward. You know what? I'm not tired. I'm still got a lot.
And I'll cut it there. So there we go. I think this all ties together, looking at where Bitcoin adoption is going, looking at the risks of institutional capture, looking at what our approaches to the ecosystem are, and looking at things in a much larger picture, much larger context. What is it to you? What is it to you? What is important? And then distilling it down and looking at that and saying, is it going to have a net positive or net negative effect? And then, yeah, so a lot to think about. I know I've got a lot to think about, especially with Bitcoin, because I need to look at and evaluate what are the risks of institutional capture. What are the risks of the KYC corral turning into a closed system, whereas Charles said, all you're doing is moving tokens from wallet to wallet. You don't have any financial sovereignty. So, I mean, that's something to be contemplating and pondering over the next several weeks. It's just one of those things. As the old proverb, may you live in interesting times, and dang, these sure are. So, I think I'm going to wrap up the video here. I appreciate you tuning in. You can follow Tiny Crypto Blog at all of the links listed in the show notes. You can always just follow along on tinycryptoblog.com. Make sure you follow there, because I also have, you can either sign up through WordPress or email subscription where you will get notifications of any new posts. If I come across anything worth sharing, any videos, any articles, I do the weekly summaries with videos and shorts, clips, and then the headlines, the weekly headlines to help you just get the 10,000, the 40, 30,000 foot view, whatever it's called, the high level view of what's going on in the space and just get a pulse on things. And of course, you can follow on YouTube, Odyssey, BitChute, where I publish all the videos. And I also publish the audio versions on Anchor FM/Spotify. And I think it's on several other platforms as well through cross publishing. So with that, be well, everyone. Talk to you soon.